Welcome to Bitcoin Escape Plan. We are at a critical moment for Bitcoin right now. Will this uptrend hold, or are we about to see a further breakdown below it? We'll be going over that in today's video. Later on in the video, I am going to talk about my general thesis for altcoins and where you should be paying attention to in the market right now. I believe that it's Bitcoin, which is why we're going to focus on Bitcoin initially. Once we go through the 4-hour time frame, we will jump to the larger time frames. If you are new to the channel, come over here and check out bitcoinescapeplan.com. Every Monday, I release a newsletter where I go in detail on the key levels that we need to pay attention to each week, as well as a brief summary of the previous week. Very useful if you are a newcomer to Bitcoin and crypto in general. We'll go over those other things later on in the video. So, we're looking at Bitcoin specifically. So I've cleaned up my chart for returning viewers. I've cleaned up my chart a little bit, took away a lot of the previous levels. These blue lines here are just the previous daily closes that are important. And then I've drawn trend lines, mostly just to see, are we going to break? So over here, this is our low, or one of the lows, not the proper low. Proper low is over here. This is earlier in February. The more local one is this guy over on the 12th. Currently, we are in an uptrend from that one, as you can see. This most recent one, again, viewers of the channel already know this. This 4-hour anchored VWAP level, that's the middle band. Most recently, we wicked to it and then held strength above it, which is very good because previously to that, as you can see, we closed the candles just above it as we wicked down below it, which I gotta say, me personally, this already was like a very bullish confirmation for me on Thursday the 12th when the price behaved that way instead of closing below it. I was already taking that as some indication of the trend that I've been talking about probably since early January. It was my belief that we will see a relief rally that extends into March or April before another significant breakdown. Part of why I want to talk about altcoins later on is I'm hearing a lot of people right now talk about how there's like new all-time highs for Bitcoin and like an alt season is right on its heels. Like, I think that's really just like irresponsible for people to be saying shit like that. So again, I'll go over those details later on in the video, but the uptrend for Bitcoin is real. That is something we want to pay attention to. It's still very early in this, but if we're using this other trend line is from the absolute bottom. It's a little bit easier to see on the higher time frames, but we're getting very close to, if we retouch it, we won't touch it this candle. Basically 67K is what I'm paying attention to. If we can hold above about 67K, then the trend is still bullish, even if we do have pullbacks against that. It's looking like there's going to be another really good entry. I can only talk a little bit about this at the moment. I've begun back testing it, but pretty much anytime we have a break below one side or the other of the Bollinger Band, it's going to give you a really clear entry for Bitcoin that you can actually, I'm looking at futures contracts specifically in order to take some leverage action on this, but technically you could just be buying or selling at key times within the market without having to add leverage or optionality, which obviously if you want the optionality. Just look into it. I'll talk about that later. Price. What is going to happen to the price in the short term? We are in an uptrend, both locally as well as if we zoom out on the month of February. Since that low, obviously, we're up. It's not currently looking like we need to retest 59.9. If we break below around that 67K, the actual daily level is closer to 66.97, but whatever, call it 67K. Then we're going to want to pay attention to that 66K pivot again. And then again, we've talked about this a bunch of times, the psychological level, the 50% mark, is about 63.1K. The other pivot is 64. So that's what we would want to pay attention to. If the price actually does fail from this point, it's going to get pulled down there. But this middle band of the anchor VWAP is sitting above that, currently sitting at 65.3K. It's a little bit down from when we interacted with it. It was at 65.7 when we interacted with it. So it's kind of starting to curve down a little bit. That's going to put more pressure to the upside theoretically, or rather it's going to form more support below us to allow for momentum to the upside. So in the short term, it still looks like what I've been talking about on this channel, which is I believe we're going to see an uptrend into March, possibly April. And then I do expect the price to continue to break down, which again would be invalidated if we break down below 67K now. And really, I would say closer to this guy. This is, yeah, like the 66K pivot that I just mentioned on the 4-hour, pretty much. If we start to see weakness below that, then this is actually a sustained downtrend, not a potential uptrend. And I'm kind of new to trend lines, so we'll see. I'm going to have to adjust these a little bit. But it is, again, for anyone who's been following the channel, I've been repeating the same shit for weeks now. That, like, this is what I believe is going to happen. We've seen the 50% retracement already, so we're going to see a slight recovery from it. If we're just honest about the reality of where we are right now, we are below the monthly SMA, period. Let me clean this up a little bit. We're below the monthly SMA. So there are no times in history for Bitcoin, and I defy you to find them for me on the chart, where we broke below it and then immediately shot back above it. Like, we spend a period of 7 to 12 months there. We stay there for a minute, you know. For every major cycle that you can look at, it's exactly the same. When we break below it, we stay below it for a while. I don't care what the news says. I don't care who the president is. I don't care. All the stable coins bills, I've talked about that a bunch. My opinion is they're going to keep dragging that out as long as they can. And as far as I know, the actual legislature, in order for the banks to really enact it, I believe does not actually occur until like January of 2027. So they can get the bills done and everything, and that's all well and good. They can kiss babies and sign checks and whatever the fuck they want to do. As far as I'm aware, banks will not roll it out en masse until next year, which means all of the theoretical money that's going to flow into the market is not on its way yet. Even if they're figuring it out in back rooms, you know, what the actual deal is. The money is not on its way yet. It's not reflected anywhere in the chart. When we go over it later in the video for like other signs with the altcoins and such, the money's not there. So you need to be more realistic and pay attention to this. This is for the people who only like to follow channels that tell you it's up and to the right forever. The realistic reality is it's going to be 7 to 12 months that we're below the monthly SMA. You know, if we want to be charitable, we can not count December here. So we're already at month 2 of being below the monthly SMA. So realistically, we got another 5 or 6 months before we can even interact with it, let alone whether or not we decide that we break above it. That's just to get back to that level, which is currently sitting at 89.7K. So my original thesis on this channel, which I've now since corrected multiple times, I believed that we were going to get another rise to that 96K pivot point. I don't think that anymore. I've been saying that now for a couple weeks. I think it's more likely that the highs that we're going to get to is somewhere between 80 and like 84-ish, I believe. This is 84.3. Somewhere in there. Somewhere between 80 and 84, I think is the most that we're going to get in this little relief rally, which is going to print as a lower high than this 98K attempt that we had. Again, it's not impossible, but we don't have any precedent for us breaking back above the monthly SMA so quickly. We are breaking down into it a little bit earlier than in previous cycles as well. This one happens in January, and we are already breaking through in November. We're already giving it up in December. So it's earlier than it typically occurs. It's less violent than it typically is. We had about a 52% retracement this time. It was about the same for the previous cycle, 52 to 55, I believe. And then the one before that was much more violent, closer to 70, 73. So it's getting less volatile to the downside, as well as less volatile to the upside. Basically, Bitcoin is getting more predictable and boring. And I think that's such a beautiful fucking gift. Like, I think people misunderstand how much it is just easier to focus on one chart one chart. Focus on learning one asset. Like, it's much easier, I think, to like, one, lose less money, and two, like, actually know what it is that you're holding and how it behaves. Like that's why I have a channel about it. I just think when I'm looking at the Bitcoin chart compared to other charts, like, to me, Bitcoin represents equality, like freedom. Like, everybody gets a chance as long as you pay attention to the rules of the chart. Now, not everybody has, like, plenty of other content creators will use different SMAs or EMAs than I'm using the 20-week SMA. It doesn't really matter. Like, you can use the 50 or the 100 or the 200. It doesn't matter. The pattern will be apparent. And if you're paying attention to whichever time frame you have decided, the pattern will be really obvious of, oh, okay, price was below on the monthly and the weekly for an extended period of time. That would have been the best time for me to dollar cost average. And like, it's not any more complicated than that. So you want to buy when it's below that line, and you can be strategic about it. You know, like I talk about a lot with my credit leverage playbook. My plan is typically to aim towards the bottom of these ranges and dollar cost heavily with as much capital as I'm able to deploy at that moment. For other people, it's already acceptable to start dollar cost averaging now, or taking small bets now. And certainly, depending on your income, if you have steady and consistent income and not a lot of debt, it's already acceptable for you to start DCA. Not financial advice, but it would already be acceptable for you. If we think about it in context of, this is a similar moment of the previous cycle. So we went to 69. By the time price is already back to 32 to 35, you would have to wait. But like I've talked about it multiple times on this channel, I believe 34 to 39 is the lowest that we can go this year, which means that if you had bought right after that 50% retracement moment in the 2022 bear market following the 2021 run, that means there would be no months at all besides that initial time that you are below that monthly SMA. So in that case, whatever, like less than this is June. Where's the following? June. It's like basically a year. It's essentially a year before you're back to break even, which doesn't sound great, but the adverse is, for someone who bought the top, you got to wait 5 years before price is guaranteed to be above that level forever, which obviously is a way worse deal than you got to wait 12 months and then you're break even and profit forever. Like, again, I don't, if your cost basis was 32 to 35,000, it's like wherever we wick down to this cycle, it's going to be there for fucking 8 hours. It's not going to be there for a very long time. So I think if you were DCAing, like the first 50% retracement down is kind of like your first signal of like, oh, okay, I need to just flip my mentality from trying to take profits or trying to like allocate into altcoins or whatever into, okay, now it is accumulation time. Like when Bitcoin gets boring, when Bitcoin is dead, now it's accumulation time. It's time to have your best strategy in place already so that you can be just able to put yourself in a position where you have more of it. If you need to sell it later, that is your right. You can do whatever the fuck you want with it, but you will be able to get more of it if you understand. And again, it doesn't matter which time frame you use. I like the 20-week. I've been using the 20-week for a long time. The 50, the 100, the 200, any of the major ones that you watch other channels tell you about, they have validity. You just have to actually learn what each time frame is telling you. Like, I don't give a shit if this is slightly over here on the 50 or 100. It doesn't matter. It's not important. You need to have something that indicates to you the general trend, and then you need to be able to act accordingly when it actually happens. So some of the other levels that are going to be important for, like we already talked about, 64K is super important. If we lose that on the weekly or the monthly, it's not healthy for the price. And we're still kind of caught at the bottom of this range, which again is like, it's this on the weekly time frame, it does look like we have more momentum to the downside. The only thing that is preventing that is us staying above that 4-hour middle anchor VWAP band, like I was talking about, that 65.3 that it's at right now. Like that's it. And that's tissue paper, you know, like it's not really that much that is holding us up from a further breakdown. And we'll know very soon, like we'll know within a couple days likely, whether we are going to have a sustained breakdown further or whether we have permission to start making attempts higher. Like I said, I don't really think it's going to go much higher than 80 to 84K. This is the, yeah, like I don't think we're going to hit that 96K pivot, dude. Like it looks ugly on the weekly chart. This SMA, I got to clean it up again. Sorry, too many dicks on the dance floor. The SMA is like well below that 96K pivot now. It's not like touching it. It's not like rounding by it. It's well below and continuing to drop below. By the time that this week closes, in a couple hours from now today, it's going to be even further down. It's probably going to be over here. I'll go over wherever it is updated to on Monday's video tomorrow. Go subscribe to the newsletter, by the way. I realize I'm writing like 1,700 words in the free newsletter. It's a lot. It's a lot of analysis that I'm giving away that you can just scroll in your own time. Instead of having to listen to me ramble for 30 minutes at a time. If only it were only 30 minutes. I know, that's what you're thinking, long-term subscribers. That's going to be all that matters, is this 64K pivot. If we can stay above that, we got permission to come back somewhere in here. I think as long as the weekly SMA is continuing to descend, it's just, by the time we interact with it, it's going to be fucking over here, below 84K. By the time that we get there, that's so much resistance to get back to that 96K pivot. So it's looking less and less likely to me. Even these closing candles were closer to 93.7. So price would struggle to get there even. I don't know if there's any precedent for, I mean, we break the weekly more often. Like this was not an anomaly. That's just something that happens. You know, like it's just something that happens. So I was kind of anticipating this, and this is like, quite frankly, very possible still. I think we're not going to retouch on the monthly, but it's quite possible that, again, this is essentially the trend that I was saying. This is into the end of March and early April, is that uptrend, where you can see again, this would be the 96K pivot in this example, but I think we're gonna, if we continue to chop around and kind of like go up and drop and chop back before we actually get the rise into the end of March like we did, and it's not gonna be exactly like 2022, but that would be, I originally thought the 96K pivot, but it's looking more like it's gonna be this 76.2K/80K pivot. With again 80 to 84 probably acting as a significant form of resistance this time around. And if we look at it in terms of the volume profile, look at that. From about 70.7K to about 86K is empty, completely empty. Like there's no volume there. There's nobody at those prices that is fighting to keep those prices. And it'll obviously, once we get closer there, some of that will get filled out, but it's also going to be a bunch of these people who are now comfortable with, I got to get out, you know, like we're too layered up above these prices that when we return to them, some of those people are going to sell. You know, they're not going to have full conviction to continue to hold, which is going to put down pressure on the price. So this trend, I think, is a little bit, like, look at how close it is on the weekly. We're like sitting right on that, you know. So I really mean it. It is a pretty critical moment for us to understand the general momentum of trend. I think historically it does favor a slight rise into the end of March here, with April being like a pretty normal capitulation as well. So this is the 2022 one. Let's see if we don't have Fibonacci pivots for the older one, but I mean, you can imagine there's probably a fib pivot like here, probably another one like here, 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 you know, for this same time period. And this is the same thing. So this is the weekly. And oh, would you look at that? It's like the same fucking time period where this is the end of March actually. So in this particular example, it had the run in early March, and then it gave it up, and then it rose back into the end of April before again giving it up. But that is like, it's pretty normal for this part of a cycle for there to be sustained pressure to the downside with some strength going back towards the weekly SMA, which, as you can see already, this one in January, we didn't even touch it. We failed it in a meaningful way, because not only do we have a failure of that Fibonacci pivot level at 96 in terms of a weekly close, but we also had the failure of 97.9K being below 100K. So what that read as a signal to new holders is, oh, it can't get back above 100. It's not going to get back. I thought the news told me it was never going to go below 100, Like it doesn't create certainty. It creates confusion and chaos, which is going to keep the price lower for longer, which is fine because you subscriber of Bitcoin Escape Plan, you are here to accumulate. So you're not worried about it. This is a good signal. When the price is able to stay below this for a significant period of time, gives you more opportunities to buy it. It's not a bad thing. So that's what we want to look for. Strength above 64K, and like I said, about 65.3K as the absolute. We would want to have really a wick no lower than that at this point, just because of the general shape that we're starting to form on the 4-hour time frame. So we'll see. Let's move on to the other portion of the video now. What am I doing? I pressed the wrong button. So when people talk about DeFi, when people talk about like having other assets that they would prefer to have over Bitcoin, they're looking for things that are pumping like this. This is a meme coin. This is a privacy coin. I have no clue what that is. This is like DeFi, I believe. But most of the rest of these things are bleeding. Everything is bleeding. Other than Bitcoin Cash. Bitcoin Cash is randomly doing pretty well. And Pax Gold, that's literally gold, but on Ethereum, essentially. So most of these other coins, these other things that I'm sure you've heard people talk about, most of them are bleeding and not having a good time right now, Bitcoin included. So what like for me, you gotta like check this market within reality. So which of these things actually does something that we can verify? I'm gonna take a look at these two. So this is Aave and Uniswap. And technically, I don't see it on this time frame, but Morpho was also on here, and Morpho also does shit. Like it actually is accomplishing stuff. But like Chainlink, same thing. Chainlink has a partnership with anybody that is worth having partnerships in crypto. Down 50%. Uniswap down 60%. When we go over to Crypto Fees, which is a great website. I love crypto.fees, or cryptofees.info rather. This shows you how much fees are being generated on either a blockchain or a decentralized application over the course of a 1 and 7 day average. And as you can see, there's only a couple where it's a decent amount of money. Ethereum, $5.4 million a day is being generated in fees. You can run a business around that. Like there's plenty of ways for other people to make money off that. And same thing, Bitcoin, about 2.3 million in fees, which is down from other time periods. You can actually go and check previous points in history for this. Crypto Fees is awesome. I love it. Anytime somebody like is telling you that their platform is better or whatever, go check if it's on Crypto Fees. It may not, because as you can see, for a lot of them, they just don't make any fucking money. Like for all the people who are stoked about Arbitrum or GMX or even Polygon, like $16,000 a day in fees, like sounds like a lot for one person, but for millions and millions of people, it's not any fucking money. It's not making anything. It's not doing anything. So the only ones, as you look at, that also have millions of dollars of fees are Uniswap and Aave, which people are actually using. A ton of people. There are billions of dollars in both of these. If we go over to DeFi Llama, there is $26.8 billion that's locked up in Aave. That's a lot of money. There is $3 billion locked up in Uniswap. And Uniswap is just allowing them to go back and forth. There's no reason for you to hold a shitload of money on Uniswap. Still, billions of dollars. And those, again, are down 51 and 60%. Oh, there's more rows right there. Like the ones that actually do shit, this is Polkadot, this is Polygon, also layer ones that like they have very low fees, but they're not generating any money, you know? Like a lot of these are going to continue to look ugly. And if we look at like the general shape for, let's go look at total 2. It's the same for Ethereum. It's the same for total 2. Like it is a general uptrend still. Obviously that's still healthy. I'm not saying that I don't think altcoins will ever return, but increasingly like that doesn't look as good as the Bitcoin chart. Like it just doesn't. And this is all altcoins. So you have to think, not only do you have to be right about the altcoins themselves, but you also have to be right about the specific altcoin that will generate the upside yield to Bitcoin. Compared to, again, let's go back to the Bitcoin chart. How much easier does it look like for at the bottoms for you to guarantee that you're gonna make money? Much easier, much less complicated, I think. And even the same as like, why would you want to get out of your gold position to get into Bitcoin right now? Like there's no, like for the people who are calling for all-time highs, it's just, there's no basis in reality based on what is happening in the markets. I just don't see it. So when we factor in how much exposure should we have to altcoins instead of to Bitcoin, you got to remember that the ones that are actually doing shit don't even perform well. These actually do something and they are not performing well. So you have to be able to buy things like Pippin, which at some point I did. I probably have some of that in a fucking Phantom wallet, you know. You have to be able to pay attention to things that have no value at all, these memes, you know. Literally, I think about them as option contracts that have no expiration or strike or Greeks or anything. Like it's just completely decided based on who can pump it, you know, who has the ability to get the money moving enough where they can build a narrative around it where now randomly it's up 2,415% over the course of the last year. But look at that. It would have been very flat and pretty dead for all of 2025 and then it randomly shot up. Like it's super hard to predict those things. And you can keep an eye on websites. I like Crypto Bubbles. This is great. You can take a look on the daily and the hourly. You can try and catch, you know, random ones. That I'm not saying that there isn't money to be made doing this, because there is, you know. But most of it doesn't look so good right now. This is the last hour. Nobody's really pumping crazy in the last hour. It's pretty much just that. So like I don't even see a bunch of other memes on here, and that's probably for the best. I don't think that they share like the bleeding edge. I'm sure that there's a bunch of bullshit on Solana that you can find right now that's up 4,000% or whatever on the day. Here we go, pump fun. Like there is money to be made. You are more likely to be the one who is making someone else money than you are to be making money until you're really able to, again, go actually see the data, interpret the data, and understand, okay, these are the only things that are actually making money, and they're not making money. Think about that again. These are the only ones that are actually making any money that would be a reasonable sum, you know, and they're not making any money. Like they're not able to like actually grow in a meaningful way because the market itself for altcoins is in a downtrend, in an overall uptrend. And I do think once the stablecoins are fully live, I do think that that is going to positively impact, like we'll probably have more of an alt season next time, depending on where. I don't think stablecoins are going to flow the same way that they typically do. Naturally, a lot of them flow into crypto, and I think now that the banks are going to be issuing them, I think a lot of the stablecoin flows are actually going to flow into real estate or gold or stocks instead of going straight from I buy Bitcoin, I sell it for a stable coin, I now put that stable coin into fart coin or whatever the fuck, like that is going to happen, I think, less once you're able to have like tokenized Nvidia, that trades 24 hours a day, or tokenized Apple stock that trades 24 hours a day. A lot of those, I think, are going to become really huge for next cycle. And it does really seem that way. Like each cycle is very different, and you need to be able to move to the next trend quickly. Otherwise, you're going to be stuck holding on to other assets, which we can go look at the Ethereum chart real quick for this. Again, Ethereum is one of the only ones that's fucking actually making money, actually printing fees. Why on earth would you have held for that instead of Bitcoin? Why would you have done that? It just doesn't make sense based on the reality of how these things move, where they have an irrational blow off top initially when they are new. The good ones get a second one, the next cycle. The literally number 2, Ethereum is silver in cryptocurrency, could barely set new higher highs in this most recent cycle. I think if you would barely count 40, this is 4,800 here in 2021, and we got to 49.5 in 2025. Now, obviously, if your average cost basis is $1,000, that's still pretty good. I'm not knocking on a 4x. That's still pretty good, but it doesn't outperform Bitcoin, and therefore, why would you have a bulk of your money on this other thing that is not a sure bet compared to you should have as much Bitcoin as possible? I really believe that like a big reason why all of these other things exist is to distract you from buying more Bitcoin, the one that is actually going to hold its value over time. Because like so much of this, even the shit that does stuff, like when they tokenize all of those assets, they're going to tokenize it on Ethereum or on Polygon. Like it's going to be the 24-hour Nvidia that you can trade is going to be paying fees to one of those networks. So those networks will grow over time. Like this, there's a reason why Ethereum is as large as it is because $5.4 million worth of just fees, not transactions, just fees that's being pumped back and forth throughout the system. There's a reason why it has an economy of a couple $100 billion, is because people use it. Like that, you really have to take that into account. Is like VeChain is one that a lot of people love. Like I see so many fucking influencers talk about that, and they're probably being paid to talk about it, but you gotta follow the money. Like you gotta pay attention to like Solana, for example, is not on crypto fees because there's super low fees. It doesn't generate any money. So where is the money being generated? The money is being generated from being able to rinse people with memes, how quickly and easy it is to just create something that has no inherent value at all and then pump it to the moon real quick and rip it out. That's legal now. The president did that. The president of the United States did that. Kanye did that. Hawk Tuah girl did that. There's a lot of people who are just going to continue to do that, and I've been burned with that as well. I really think you need to treat any meme coin or anything like that as a trade, possibly even a day trade. These are not things that you should be holding for an extended period of time compared to, again, everybody's got a different strategy. I'm sure that there's a lot of people who listen to my channel regularly for my analysis you have way more money than I do, and you probably are better at switching from asset to asset. I just think for the average person, Bitcoin's just easier. It's just easier, it's safer, it actually does something. Governments and corporations are amassing this thing. They're not amassing a ton of Solana, certainly not a bunch of Pippin, like they're not. You gotta follow the money. You gotta follow the money. And the money at the moment is in gold and SPY, not in Bitcoin. And it's going to stay there because it makes sense for people to stay in an uptrend until it's clear it's no longer an uptrend. And Bitcoin has been clear, it's no longer an uptrend since October, really November, when we broke the monthly SMA in November. that was already a sign of game over. The price stays above the monthly SMA for a long ass time. So when it goes back down to it, you got to change your bullish hat to my DCA hat. You got to be realistic about where we are in the market. So hopefully that helped you understand a little bit more about, I think it's insensitive and irresponsible for people to be talking about how altcoins are about to rip really closely. Again, you can find memes like this almost every day of the week. It is hard to be correct and not consistently get rinsed with those. It's possible, but I don't think it's obvious. And then there are just trends that you can pay attention to. Again, this is Zcash. I'm sure Monero is pretty similar as well. Privacy coins tend to go up when Bitcoin is really struggling to the downside, as well as, again, stable coins during this time period typically start to go up as well. There's a slight downtrend at the moment, really just a consolidation, but the digital asset treasury companies are at negative flows at the moment. They're no longer buying with the same ferocity that they were buying. ETF flows as well, mostly in the downtrend over the last couple weeks. But that's days, actually. Still a lot of money flowing in crypto. 5 billion a day is still pretty good, but we've got to just be realistic about this is a downtrend. We're going to see a consolidation. I do think more money is going to flow into alts via the stable coins over time, but I don't think it's going to be predictable which ones or even why. Just because all of those assets are going to be tokenized on Ethereum does not mean that the price of Ethereum is going to be rewarded for that. It just means that more fees are going to be paid onto it, so the people who are validators on Ethereum are going to make a lot of money. The same way that the gas stations that have to buy a bunch of gas, it's more expensive for them too when the price of gas goes up. But they're still going to stay on all day so that people can continue to use it. You know, it's still a very efficient way to make money. So the validators will be for like the people who have 32 Ethereum or more that run their own nodes, like those people will be rewarded handsomely in Ethereum. So that's the other thing to remember. All of these other assets, most of them don't fucking do anything. Even the ones that do something are down. So if you have a large bag of this thing that doesn't do anything, and your only reason for holding it is that you're hoping it does more than Bitcoin, you don't have proof that it's going to or that it will again, you know. Like to me, I've learned the hard way that most of your money should be held in Bitcoin, and you can take risks on newer things as they come up, but you have to acknowledge that it is a risk and that there are certain times in the market where it benefits you to do that and certain times where you kind of got to stay away from it unless you're a sophisticated trader and you're able to long or short these. You know, to wrap up the video, for me, that's what I'm focused on now is I want to start trading futures contracts, and I'm looking on the 4-hour time frame. Like I always talk about here and on Threads, I'm looking for clear as day entries where all I have to do is buy it when it's below the Bollinger Band and wait till it goes up 1%. Sometimes you're going to catch a 2 or 3%. But if you can consistently only enter when it's at a clear moment, which it would have been hard for these, would have lost a lot of money that week. You know, you got to be able to pay attention to the broader trend. But there's just a lot of times where you're able to catch a clear entry, get out quick. But for most people, that's going to be a losing game. That's going to be difficult, and you're going to have a strategy and be comfortable with losing for a period of time before that strategy proves itself. And for most of us, you should just be focused on learning the broader trend, understand the broader trend, understand what it means when we are below the weekly or the monthly SMA, understand how long we can be below the weekly or the monthly SMA, and then just position your income in your situation in a way where you can make sure that you have some Bitcoin at the bottom. Don't buy fart coin at the bottom. Don't buy random stuff at the bottom. Or if you do, do a small amount, It really, we are coming close to the time where it's going to be, in my opinion, this year is the last year that Bitcoin will ever be below 100K ever again. Other than if we start next year still below it. We will be on an uptrend for most of that year. I don't think next cycle is going to break 100K. I think that's going to be the support that we drop down to from wherever that next peak is. So we're kind of like, we're at a historic time for being able to buy more at reasonable prices. We're pretty close to the ETF buyers. Like, that's the bulk of the ETF buyers. Once we break through that range, we get our last little pump lower towards that 34 to 39 that I said. And then it's done. We're back to Bitcoin is bullish, back to people start talking about it again. Your grandma asks you about it on Thanksgiving, It's going to be the same thing, essentially. Like, for people who say that Bitcoin's going to like escape the traditional financial system, or that it's going to change everything, it's like, I think those people are delusional. It's just going to fit inside it. It's just another puzzle piece that's from a different puzzle, but somehow it just fits perfectly, Like, that's reality, is that this is something that is traded 24 hours a day, that can be used as an alternative to gold or other stores of value at the moment, which means there will be times where this suffers and gold rips, and then it will reverse in the opposite direction. When gold finally peaks, the value is going to have to go somewhere, and they're going to be looking for somewhere that it makes sense, and it'll be very attractive on the Bitcoin chart when it's in a clear uptrend. And if gold, conversely, is in a clear downtrend, that's when we will start to see the money shift from one to the other. I do still think that's going to take a long time for gold. I am of the opinion it might rip till 2029, 2030. Not like 80% a year, but it may stay in an uptrend until then. And that's pretty much it. So at the moment, it's kind of boring for Bitcoin. You should just be focused on your DCA strategy, or if you're a little risky like myself, the credit leverage strategy, just getting your credit in a position so that when it counts later this year, you can go hard and buy as much as possible. Stoked to release that book soon and talk to people more about it. Getting a lot of good feedback from my friends that have heard me talk about the strategy, but that's pretty much it for Bitcoin. We got to see strength above 64K. If we can see that, cool. We got a relief rally. I still expect that relief rally is going to fail on the weekly SMA. We're not even going to touch it on the monthly. And that's it. I'll see you tomorrow.